Good afternoon, everyone, and welcome to Stock Market Today for Wednesday, March 26th. It's Alissa Coram here. And in today, we saw a lot of broad-based selling, some concerns not only on the chip side, but also on the tariff front as well. And joining me now to discuss today's market action is my colleague, Ken Shreve. And Ken's got some stocks for us to take a look at today. And we have a lot to discuss for the major indexes. I'm actually not seeing Ken here in the room with me. It was such an ugly day. Maybe he needs a little more time to prepare mentally for today's discussion. But I'll go ahead and talk about what we're going to be discussing today, and then Ken can join whenever he can. So first, the couple of stocks on our radar, we're going to be taking a closer look at Yum China, as well as ticker EXC, that's Exelon, and then finally Kroger, ticker there is KR. But before we get into those stocks, we do want to take a look at the major indexes. So we'll kick things off with a look at the Nasdaq. You could just see here very clearly on the chart the big decline from today's session, with the tech heavy index closing down 2% on the day. Meanwhile, the S&P 500 down 1.1% on the day. There was an attempt at a comeback into the final minutes of the day, but really not much relief even into the close here. Just a lot of selling throughout the day, as we do have those tariff concerns. And Ken, now joining me, I just went over the stocks that we're going to be taking a look at and then started looking at the major indexes. But we are, looks like, all right. I'm just going to stop my share there for a second. We're having all sorts of fun. The market is topsy-turvy. We're being thrown for a loop today, but a lot of big losses, Ken. So first, let's talk about what was driving the selling today.
Well, when I was looking at NVIDIA down 1% in pre-market trading, I wasn't thinking it was going to be too bad, but it was really a day of chip stocks selling off that weighed on the Nasdaq's 2% decline. There was a headline from NVIDIA that China is talking to some of the country's largest tech companies, telling them not to buy these scaled down NVIDIA chips because NVIDIA is violating China's energy efficient rules. So that really ended up fueling a broad-based sell-off in a lot of AI stocks. The rest of the market held up not too bad. I mean, breadth overall on the NYSE and Nasdaq, not as bad as you might think on a day that saw the Nasdaq fall 2%. But and then you had the tariffs. President Trump is set to start speaking pretty soon on some auto tariffs, some uncertainty about what those are going to look like, and then of course we're not far away at all from April 2nd, when we're going to get a lot more tariff news from the White House.
Yeah, that's next Wednesday. So you mentioned a concentration of selling in chips, the SMH chip sector ETF down 3.3% on the day, while NVIDIA plunged 5.7%. But if we do take a look underneath the surface in terms of our equal weighted index ETFs that we like to take a look at, QQQ versus QQEW, for example. The Q's down 1.8% on the day, while QQEW down just 0.8%. We did see a similar divergence here between SPY and RSP. SPY down 1.2% on the day. RSP down just 0.7%. So even though widespread carnage on the index level, if you look underneath the surface, as you mentioned, Ken, it does seem like there were some pockets of concentrated selling out there.
Yeah. So we've been talking about a lot about these equal weighted ETFs, RSP and QQEW. So again, even though a 2% decline for the Nasdaq, especially after that sign of strength on Monday, that that we saw. These the market breadth not as bad as you would think. On the Nasdaq, just a little more than 2 to 1 negative, and actually on the NYSE, it was slightly less
Mm,
than 2 to 1 negative. So yeah, I mean, you can hang your hat on a day of decent breadth, but make no mistake,
right.
this is what distribution looks like in an index. You can see that big price bar and the volume that came along. Uh, that came with today's declines here. You can
No
see a
doubt.
big spike in volume. We didn't have any options expiring today. This
Mm,
was just a plain old heavy volume decline for the
right.
Nasdaq. And again, most of the selling in the chip sector. When I look through the Nasdaq 100, it's all your former AI leaders down 5, 6% on the day. Broadcom, AVGO, Marvell, MRVL, Nvidia, even Palantir and Tesla
Right.
suffered big percentage declines.
Yeah.
So. Yeah, this is tough. It does definitely call into to question certainly the strength that we saw Monday in the Nasdaq, and the fact that we sharply undercut Monday's low doesn't bode great for this rally attempt. But the week's not over, and we still have an important piece of inflation data to digest Friday morning.
We do. And I just also want to comment in terms of what we saw underneath the surface. Of course, a lot of technology selling, but even outside of technology, growth did get hit as well. But I think that sort of goes to, we've seen this risk on versus risk off. So it seems like, those risk on type names. That is where a lot of the selling was today. I'm glad you mentioned the low of Monday, even though that was not an official follow through day due to volume. It was a follow through day in spirit because of the power. It did warrant some sort of increase in exposure if we did continue to see the market rally gain steam. But today, considered an expectation breaker. As you mentioned, a close below the low of that day. We are still above the close from Friday, but still, it seemed like today was a day to maybe sort of unwind or back away from the exposure that traders added earlier this week.
Yeah, and we did that on leaderboard. We came in about 57% invested, ended the day about 42% invested. So having a still decent cash position headed into today helped with our performance against the S&P 500. We lagged, but just by a little bit. So felt it was an opportunity to raise some cash. We're still holding several 7 names or so that are not flashing sell signals. So we'll give those a little more room to work. But anytime, even if we had seen a follow through day and confirmation of a new uptrend here, anytime you get a distribution day, very soon after a follow through day, it's just reason to
Right.
proceed cautiously. So,
Mhm.
and again, with the Nasdaq today, this was unequivocal, distribution.
Right.
So, does raise questions about the likelihood of a sustained rally from here. But as we've been saying, this is a very whipsaw, gyrating market. We don't know how the market is going to, respond to what Trump has to say pretty soon on the auto tariffs. We don't know how the
Right.
market's going to respond to a key inflation report
Mhm.
Friday. But we do know that it's a risky environment out there, and we've been at a
Yeah.
very conservative investing posture for some time now.
I agree. Take things gradually for sure. And even though there was a news driven element to today's selling, we do know that when you have rally attempts below the 200-day line, you're in a vulnerable position, right? So again, news driven, but not all too surprising to see where it is that we uh, are struggling, especially with the S&P 500 right at that 200-day line and turning tail today.
Yeah, I mean, we've mentioned it before, but it bears repeating. It was a violent 3 week drop for the Nasdaq and for the S&P 500, 6147 down to 5500. And when you get the velocity of declines like that, and you saw a lot of distribution days when that was happening, lots of higher volume declines. It's rare when the market just bottoms and then just turns right back up. It's usually some back and forth price action. This the distribution that we saw during that 3 week period, is generally going to need a little more time to resolve. So right now, S&P facing some initial resistance at the 200-day moving average. Again, we don't want to get overly bearish here. Certainly
Sure.
not going to get overly bullish. We'll just maintain our conservative invested posture and see what
Mhm.
tomorrow brings.
Yeah, tomorrow and the end of the week, I think where we close on Friday will be really interesting. But as you mentioned, the April 2nd deadline, that's next Wednesday. So that
Yeah.
is right around the corner, just a couple of trading days away. But we even still today have tariff related headlines. So we know that this is a big issue that investors have been grappling with in recent weeks. And then you layer in on the chip front, seeing destruction related to that industry there as well. So a lot that investors are having to contend with here.
Yeah, and don't forget, we're almost at the end of the first quarter here, and companies are about to close their
Mm,
books on the first quarter, and we're going to have a whole bunch of earnings reports starting in the second half of April. Towards the end of the month, and one of the big concerns in the market, the reason why we came down so quickly during that 3 week decline is, legitimate concerns about what these aggressive tariffs, are they going to result in higher prices for consumers? There's a lot of experts out there that believe that putting tariffs on car imports coming in from across the pond, that's just bound to make cars more expensive here. So we'll have to see, but we've got earnings coming up, and a concern that corporate earnings could slow down right along with the economy. So the market is still trying to figure things out, wanting more clarity from President Trump, but just a lot of uncertainty out there, and just makes for a difficult
yeah.
environment overall for stocks.
Yes. Time to be nimble and open to all scenarios. Okay. And we're going to be talking about that more on today's podcast. Scott St. Clair and I live at 5 p.m. Eastern. Really would love for everyone to join us at that time. Okay. Let's talk about the stocks, Ken. Yum China up 2% today, broke out, a little bit of a pullback, pretty orderly, and now bouncing again today here.
Yeah, I'm not sure I was ever going to be in a point where I would be calling China sort of a safe haven, but it's
Yeah. Who
China
would have
stocks
thought?
really did outperform today, and you have so much weakness in the U.S. Stock market. You had more money flowing into to China stocks today. So Yum China was a nice clean breakout, from a long sideways consolidation. The pullback was pretty orderly, just came right down to its 21-day moving average, showed some support, and as it finds support, it's kind of back in a buy zone here. So China is very difficult to trade. Yum China, of course, is Taco Bell, KFC, and Pizza Hut. Yum Brands also owns Habit, but I don't think they're selling
Mm,
Habit burgers yet in China. But this is a pretty good setup, and as money continues to flow into China, it's a stock that's still in a buy zone and still in a reasonable technical setup here. So doesn't have the fundamentals, the big growth that we like to see. You get some single digit sales growth in recent quarters, but pretty good technical setup in this market. While investors should really be favoring a lot of cash right now, if you want to try on some stocks that are outperforming, Yum China looks to be pretty strong in this market. But again, being nimble is important, like you said. So
mhm,
there may come a time when China stocks start to face a lot of distribution too. But
right.
this one's still holding pretty well in a weak U.S. market.
That it is. Okay, next let's check out ticker EXC. This is Exelon, a utility name, Ken. Been trading sideways. It let that 50-day and the 10-week line catch up. So bouncing off of the 10-week line for the first time since its double bottom breakout a number of weeks ago.
Yeah, if you look through the market surge growth 250, the wonderful screening tool that we have, there were a lot of biotech, excuse me, utilities that look like Exelon recent breakouts, and now they're coming down to that key support level, the 10-week moving average. So again, utilities a very defensive area of the market. So money is definitely parked here. So we've got a U.S. market, Nasdaq, S&P 500 that are under some distribution here. So people hiding in utilities as well. A lot of broad-based strength, whatever utility group you're looking in. So Exelon looks actionable here off the 10-week line, moving sideways, like you said, for
Mhm.
not quite 4 weeks. If it continues to hold support here and move sideways a little bit longer, you have a nice tight flat base
Right.
forming here. So, but great first test of the 10-week line. So it looks like an actionable stock to me.
Yeah, and I'd imagine XLU, the utilities ETF, up on the day. Well, we saw a lot of carnage elsewhere, again underscoring sort of the defensive tone to today's session.
Yeah, and also, I didn't really get a chance to talk about the Dow, but talking about outperformance, there were obviously your tech stocks in the Dow, Salesforce. Nvidia and Amazon were a drag, but you can see the blue chip index was only down 0.3%. I counted 8 or 9 names that were up at least 1% on the day. So, market kind of going into some defensive
Yeah.
names in the Dow here as well today.
Absolutely. Okay, let's check out Kroger, ticker KR, up on the day. A couple of pullbacks here. The first one was below the breakout from that January February timeframe, and now the second pullback to the 21-day line. It's above that buy point. Let's check out the weekly chart. Yep, right on cue. Finding support at that 10-week line. I know you love seeing that, Ken.
Yeah, yeah, and this is kind of a slow, steady mover, but again, investors playing defense in the grocery space here. So this is another stock that holding support. It's not forming a new base here, but it still looks to be in buy range to me. Not only from that prior breakout, but just as a 10-week test going on here. So you can see just holding slightly above the 10-week line, relative strength line up near highs. Again, not seeing a lot of fundamental superstars here in the grocery space and the utility space, but stocks showing a lot of technical strength. So while growth stocks are selling off, you want to pay attention to where the strength is in the market. So I think the three names that we discussed today, finishing off with Kroger, they all look actionable here. So we do say a weak market tends to go after eventually go after everything, but at least with Kroger still fighting a good fight here and holding gains, moving sideways, looks like it's showing a lot of strength and support.
Absolutely. All right. Well, Ken, any final thoughts today?
Well, IBD Live tomorrow. We'll be talking more about the market, and I think it's just a very tricky market right now. The big volume in the Nasdaq was a concern today. It was an unequivocal distribution day, so we'll have to see. I think that again, as I mentioned in an earlier show, the more the less higher volume declines that we can see in the indexes from here, and even some higher volume gains will at least be a clue that some money is coming in from the sidelines. We're going to continue to keep an eye out for a sign of strength. But we're really kind of getting late into the rally attempt, not only for the Nasdaq and the S&P 500. So I suspect things will stay challenging for a while until April 2nd passes and the market gets at least a little more clarity
Yeah.
on these tariffs. But until then, probably some volatility,
Yeah.
chop. Good to just be kind of favoring cash here.
Mm-hmm. Well said, Ken. All right. Well, for more perspective on the market and a step back look at how to handle big shifts in market direction, join Scott St. Clair and I live at 5 p.m. Eastern today on our YouTube channel. And thanks, Ken, for our podcast this week. We'll miss Justin. He's on vacation, but Scott and I have a great podcast episode planned for you. Not only are we going to talk about what could happen in different market environments, but we're actually going to give you practical tools that you can apply in the current market to score big wins when we do get a big signal of a shift in the change in market tone. Until then, like Ken said, we will be nimble, but make sure to check out our podcast coming up live at 5. And if you can't catch it live, you can always watch the recording on YouTube at investors.com/videos or your listening platform of choice because it is a podcast after all. So we'll see you there at 5 p.m. Eastern. And then Ken mentioned we've got you covered tomorrow morning before the opening bell on IBD Live, investors.com/IBD Live for all the details on that. So the team will see you there. And then we'll also see you right back here tomorrow after the close.